On today's episode of the What Do We Do podcast, we're talking about Q4, which some say is the most important quarter of the year. Well, why is that? Well, because depending on where you're at before it starts, the fourth quarter can either make your financial year or perhaps break it. Markets are moving. Companies are reporting earnings. Big announcements from the Fed are shaping interest rates, and the clock is ticking toward December 31st. It's not even just about the markets. It's about taxes and the clock striking midnight on 12/31. This is the final stretch, the time where the right money moves can protect the gains you've made, reduce your taxes, and even set you up to sprint into the new year ahead of the pack. I'm going to break down exactly what I look at in Q4 and what I plan to do, the catalysts that matter to me, the noise I think you can ignore, and the simple but powerful moves that I need to make before the ball drops at midnight on December 31st. It's going to be a great show, so hit the subscribe button, give us a follow, and let's go. Well, hello out there, Podcast Nation and YouTube world. Thanks for tuning in to another episode of the What Do We Do podcast. This is Season 6, Episode 3. I'm your host, Dewey Stephan, and I'm also the CEO of Great Lakes Wealth. Today, we're going to talk about and manage Q4 2025 together. So let's dig right on in. Okay, well, what actually moves markets in the fourth quarter? Everyone likes to say the markets are volatile or the year end is unpredictable. But if you zoom out, there are really just a handful of signals that matter most. Let's break them down one by one. Okay, to set the stage, the Federal Reserve has been on a course of monetary easing since late 2024. And with their most recent interest rate cuts and the fact that interest rates are now expected to continue their gradual decline through the end of 2025 and into 2026, we can add this also to our analysis. This easing is in response to a moderation in economic activity, and an easing, though not yet a full-on taming, has hopes of being an easing on inflation too. The global economy is showing a mix of resilience and uncertainty. U.S. GDP growth has been solid, but is expected to slow. And inflation, while easing, is still a concern, especially with the ongoing geopolitical factors and trade tensions. And the broad market averages, particularly the S&P 500 and NASDAQ, have had a strong year, largely fueled by mega cap tech stocks. The key question for Q4 is whether this rally can continue or if other sectors will come into the rotation. Idea number 2, let's discuss earnings season. This isn't just about whether a company meets or beats or even misses estimates. The value is in the forward guidance. What are CEOs and CFOs projecting for next year? Are they raising or lowering expectations? If management teams are cautious, that could be an early sign of a slowdown. If they are optimistic, it can fuel momentum. I'll be watching tech, big box retail, and financial earnings because their results and the comments often lead the rest of the market moves. Number 3, holiday retail data. The holidays aren't just about gifts under the tree. They're about a massive economic signal. Are consumers still spending on travel, gifts, and even experiences? Or are they pulling back? A strong season suggests confidence. A weak one hints at caution. I watch not only the sales numbers, but also credit card debt and even buy now, pay later usage. If people are spending, but it's all on debt, that's a big red flag. Number 4, year-end flows. Institutional investors are rebalancing portfolios too. Tax loss harvesting is happening. Mutual funds and ETFs are cleaning up their books before year-end as well. There's even what's known as the small cap effect, where smaller companies sometimes outperform at the end of the year as investors reposition their portfolios. These flows can create short-term volatility, but also opportunities if you know where to look. And let's not forget what we've talked about in many other prior Q4s, the Wall Street's Santa Claus rally too. And number 5, sector rotation. Every year, leadership in the market changes. One quarter, it's actually tech. The next, it's actually energy or industrials, or maybe even healthcare. Well, in Q4, I watch which sectors are pulling ahead and which ones are beginning to fade, because often that carries momentum into Q1 of the following year. I hope all of this makes some sense and makes you some dollars too. All right, well, here's just as important what I do to ignore. How about the daily clickbait? Headlines, every rumor, every hot take on social media. To me, that's no good noise. Focus on the signals that actually matter, not the drama of the day. All right, here's our Q4 investor checklist. What to do before December 31st. Now, let's talk about what your personal playbook, the money moves, should look like and what you need to do before December 31st. These aren't complicated, but they are the ones that separate the disciplined investors from the distracted ones. Number 1, rebalance your portfolio. After a year of market swings, your allocation is almost guaranteed to be out of whack. Stocks may have grown to take up too much of your pie, and the bonds in your portfolio may now be underweight, and rebalancing gets you back to your target mix, and it also could reduce your risk going forward. Number 2, max out your contributions. 401k, IRA, HSA, 529, don't leave tax advantage space on the table. Every dollar you put in before the end of the year is one less dollar Uncle Sam can tax. And 401ks in particular, you have until 12/31/2025 to max them out. Once the clock and the calendar turns to 2026, it's too late for 2025. Number 3, tax loss harvesting. If you've had losing positions this year, you can sell to offset any gains, and that will lower your tax bill. I view this as a huge deal and a great strategy. But remember, the wash sale rule says you can't buy back the same security within 30 days. And just so you know, there are some smart ways to stay invested while capturing this tax benefit. Please reach out to your financial professional to learn more. Number 4, charitable giving. This is the season of generosity, and there are tax benefits for you too. Whether it's direct giving, donor advised funds, or even donating appreciated stocks, you can give more strategically. Remember, also, when we turn the page to 2026, the charitable giving of 2025 is over as well. Number 5, RMDs and equity compensation. Well, an RMD is what's known as a required minimum distribution. And don't miss this deadline in 2025. The penalties are steep. And if you have stock grants, options, RSUs, or anything else that's vesting this year, you might want to make sure your plan is on track before December 31st too. And how about a bonus 6th idea? Top off your cash bucket. In this current environment, I believe investors should have a higher cash reserve. So aim for between 6 to 12 months of cash reserves or equivalents. That way, in 2026, if it starts bumpy, you're not forced to sell. And guess what? If there's a dip or a pullback or even a correction, you'll have cash on the sidelines to dollar cost average, aka DCA, for added success. Segment 3, setting up success in 2026. All right, as we talk about wrapping up Q4 2025, it isn't just about wrapping up the rest of the year. It's also about positioning yourself for the next year too. So ask yourself these 3 questions. Are you carrying strong momentum into January, or are you limping across the finish line? Have you cleared up tax headaches now so they don't snowball out of control into next April? Do you have liquidity set aside, aka dry powder, to seize opportunities if the markets do take a dip? Success in 2026 starts with discipline in Q4 2025. The work you put in today sets the stage for growth tomorrow. So invest for success by having a plan and doing the work. And as I always like to say, if you fail to plan, you plan to fail. Well, in closing, here's the truth. Q4 isn't just about finishing this year strong. It's about being proactive and setting up your success for next year too. Focus on the right signals, check the right boxes, and avoid all the noise. If you do all of this, you'll be in good shape for the end of this year, and you'll be ahead of the curve for 2026 as well. Okay, well, if this episode fired you up, do me a favor. Like the video, share it with a friend stressing about year-end moves, and subscribe to the channel for more strategies. Also, feel free to drop a comment to the following question below. What's the one money move that you always make before December 31st? With that, as I always say, live your best life, be radically generous, a great big booyah to ya. And this has been Season 6, Episode 3 of the What Do We Do podcast, and we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.